Good morning and happy Monday. Today is April 4th, 2022, and this is my mortgage rate pricing for today on conventional loans. I'm also going to address the question, are mortgage rates going back down? Before I get into this stuff, I wanted to let you know in the description of this video is a link to this video because I understand this stuff could be boring. Even though my advice is going to potentially save you thousands and thousands of dollars, I understand it could be a little dry. So after this video, you can click on the link and watch Man Digs a Hole in a Mountain and Turns It into an Amazing Apartment. All right, so let's get into it now. What you're seeing here is a side-by-side excerpt from the 30th last Wednesday and today's pricing, and I'll tell you why in a second why I have these side by side. In each of my videos, and I apologize if you've seen this before, so I'll just be real quick about it. In each of my rate videos, I always let you know that in the left column here, this is the advertised rate, the one that you always shop for, the one that determines your monthly payment and how much you're going to pay in interest over the life of the loan. And then I tell you that there's two things that the APR can do for you. I always mention this because the APR is one of the most misunderstood terms, I believe, in my entire industry. I've seen so many videos on it and people speak about it and they screw it up almost every single time. So I always like to mention that, the APR. And I don't go into the formula of calculating the APR because I don't think that will do you much good. I go into how to use the APR, and I always mention two ways, and today I'm going to show you a third way to use it. And the first way you can use the APR is to determine if there's fees associated with the advertised rate. And I always let you know that the higher this APR is above this advertised rate indicates more and more fees associated with the rate. Like if you go down here and look at this one, for example, or this one, whichever one, the APR and the advertised rate are about the same. That indicates there's no lender's fees and points associated with that rate. You go up here, you can see that it's higher, so there's obviously fees associated with this advertised rate. The second thing I let you know is that a lower APR indicates this advertised rate will save you more money over the 30 years. Even though this one has more fees than this one, this lower APR indicates that over 30 years it's going to save you more money. Now, there's a third thing you can do with the APR, and that is you can watch what mortgage rates are doing or about to do. This will give you an indicator. So what happens behind the scenes is that the fees for these rates change like every day, and sometimes a couple times a day, and this is reflected in the APR. And once the fees get too high, and I'll show you this on another slide here in a minute, once the fees get too high, the lender will stop advertising that rate, and this gives the feeling that rates are going up or down. That's why you always hear people saying rates are going up, rates are going down. What's actually happening is that the rates that lenders are advertising is going up or down because the cost for those rates are going up or down. And now here's another tool you can use to check out the cost. So look at this one. This is from last Wednesday, 3.750 and an APR of 4.079. Well, we still have that same 3.750 advertised rate today, but check out the difference in the APR. It's subtle, but it's there. This APR 4.079 compared to the APR here 4.075. This little downward movement lets you know the fees drop down. Same thing with this one. This 3.875 rate, it still exists, but the APR last week 4.143, today 4.139. So and so on. You can go down the list here and see that the cost is starting to drop for these. Now, they won't always drop together. In fact, some might even go up. Check out this 4.875. The APR last Wednesday was 4.848. Today, it's 4.858. So they don't all change. And this is another one of the reasons why I like to give you a broad selection of rates instead of just trying to cram one rate down your throat like the other places do. Now, it's not wrong to advertise just one rate, but I like to let my customers know that you actually have a selection. This is important because there's so many different scenarios, so many different loan amounts, so many different credit scores, so many different types, cash out, rate terms, so many different types of scenarios that maybe one or two of these rates are going to work better than the others. And having a broad selection available allows me to fine tune something that's going to work best for your scenario to save you more money. That's another one of the reasons why I like to list more than just one rate. But it is common, of course, that's everybody in the industry. Like, for example, you can go to Quick Insight. They have for each of their programs here, they just show one rate, one APR. You go to these guys, same thing for these different loan amounts, one 30-year rate and APR. That's just how it works. They could show more, but they just choose to show the one rate. In actuality, let me show you really quick. This is actually how it looks behind the scenes. It really looks like this. You can see even here, this is real life pricing. 2.75 still exists. It's just a lot more expensive. On a $400,000 loan with 740 credit, I was able to do this back in December with no cost at all. Now you can see the costs are a lot higher. So as the pricing gets higher, lenders will stop advertising the rates with a lot of cost. They'll usually stick to advertising a rate that has little cost or no cost. And now I'm going to get into the full pricing for today. So as you can see, I've got this full selection of rates listed here along with their APRs. I save all of these in a playlist, and I do that to make it easy for you to go back and compare one week's pricing or one day's pricing to another. Now, if you see this APR continually go down, like say over a period of 3 days, well, we got ourselves a trend going. Now, my technique I use, you don't have to use the same technique. It's like let's say I keep watching this and I'm watching it and it's been going down for a week straight, say a week and a half straight. Then at a week and a half, it starts to tick up. So that's for me an indication maybe I should make my move now because we hit the bottom, now we're going up. So that's a way that you can do it to determine if interest rate pricing is going up or down. Now, keeping in mind, we're not going to get way down to the back at a no-cost 2.75 rate again. We're not in that land anymore. We were in that artificial low, that artificial COVID-19 low for almost 2 years, and I let as many people know, hey, that's not going to last forever. We're going to go back to normal pricing, and that's what's happening now. You'll see a lot of videos, I know, where they have these thumbnails where the guy or the girl, they have their hands holding on the side of their face and in big letters, oh, rates are back up to 5%, rates are soaring, and you hear that on the news. That's not really happening. What's going on is that we're going back to the norm. This is where we should have been, but we were in the artificial COVID low. So don't panic. We're not having another mortgage and housing crisis. We're just going back to normal. So take a chill pill. Everything's all good. So that's it for today. Remember, refer back to keep an eye on these. Even if you don't watch it every time I put out one of these videos, I put out one of these rate videos maybe 2 to 4 times a week, or as pricing changes. You don't have to look at it that often, but maybe check them out even once a week. That way you can keep an eye on what these APRs are doing, and that'll help you make a move on the rate pricing. And again, quick reminder, don't forget to look at this disclosure section. My pricing is based on a 680 because 680 is about the nationwide average on credit. If you have like a 740 or 760, the pricing is going to be better. And a lot of lenders advertise their rates using a 740 or a 760 credit score to make them look better. I like to keep it real, and so I use a 680. Anyway, I hope this video helped keep an eye on that playlist so you can keep track of what these rates are doing, because we very well might get a retraction. But if you wait for this information to hit the news, if they're on the news telling you that rate pricing is going down or rates are going down, it's too late. They're usually a week or more behind on it. So keep an eye on what's going on here, so when they are down, you can make that move and get the best pricing possible. Have a great day. Enjoy the rest of your Monday, and I will talk to you soon.